weeks ago, we made a video discussing 5 real-life cases where NRIs had to face massive penalties. One of those even went as far as 1.2 crores. Because FEMA laws are poorly understood, a lot of you folks requested a video about what FEMA laws are there that NRIs need to take care of. So in this video, I curated a simple checklist that should help you understand what you can or cannot do as an NRI to stay compliant and avoid penalties. Make sure you watch this video till the end because NRIs have paid lakhs for the points we'll discuss in the video simply because they had no idea it was even a violation. Welcome to NRI Shaala. I'm Malvika and this is where we navigate NRI life together, from visa guidance and investments to maintaining your roots while building your future abroad. Before we begin, I want you to understand that this video is only for your awareness. FEMA laws are complicated and all of them cannot be covered in a video of this length. Being aware of them is crucial because you might be violating a single law and can be fined 5,000 rupees per day for the complete period of violation. But while we'll keep educating you in our future videos, we'd recommend that you seek professional advice from experts who specialize in NRI-related matters. Alright, let's build a FEMA compliance checklist together. We'll cover 5 critical areas of regulations where NRIs frequently run into trouble, often without even realizing it. The first 2 categories affect every single NRI, whether you're a student, working professional, or raising a family abroad. These are the non-negotiables that apply to everyone. Bank accounts. Disclose your resident status starting with the most immediate one, your bank accounts. In the last video, we shared a case of an NRI, Mr. Trehan, where he was fined 5 lakh rupees for using a resident savings account to keep his income. The case was finally settled for a penalty of 1 lakh rupees, but it would have taken him just 5 minutes of his time to prevent that from happening in the first place. A lot of NRIs keep using their old Indian accounts to avoid paperwork, thinking it's fine since everything still works. They transfer money, receive funds, and manage savings just like before. But like Mr. Trehan, they're always at risk of getting hit with a huge penalty. So the first thing on the compliance checklist is to disclose your resident status to your bank. Banks will immediately flag illegal transactions before they happen and prevent you from violating the law. It's a simple one-time process that can save you lakhs in penalties. Know your bank accounts. Following up on the last point, here's what most NRIs don't realize. You can't just hold any type of account you want. FEMA rules bar NRIs from holding ordinary resident savings accounts. There are specific account types for specific purposes, and using the wrong one can cost you crores. So what are these account types and when should you use each one? First, NRE accounts let you park foreign income in India with full repatriation rights. The second, NRO accounts manage India-generated income like rent or dividends but aren't freely repatriable. Next, FCNR accounts hold foreign currency deposits with repatriation benefits. And lastly, when returning to India permanently, convert your NRE or FCNR to an RFC account to maintain foreign currency holdings. Remember that 1.2 crore penalty case? That NRI kept renewing his FCNR account for 24 years instead of converting it to the RFC account when he settled back in India. So make sure you know the bank accounts you are eligible for to avoid unnecessary penalties. The next banking checklist item might surprise you, but FEMA is very strict with not just your bank accounts, but also who you give access to, and that is your power of attorney. Many NRIs give POA to family or friends back home to handle bills and investments, which seems logical. What they don't realize is that this signature creates serious violation risks they might never know about. Your POA holder could transfer funds between NRE and NRO accounts without proper authorization, send money to third parties, or make unauthorized gifts from your accounts. If FEMA authorities discover this, both you and your POA holder face consequences. You will have civil and criminal liability, frozen accounts, and possible embezzlement charges. Remember these 3 critical points for POA misuse. Never authorize direct payments to your POA holder. limit the POA scope to specific transactions only, and regularly monitor all account activities to catch unauthorized transactions early. The last banking item may sound boring, but it creates serious problems: your KYC compliance. Most NRIs update their contact details with family in India but forget to update their Indian bank accounts. They assume everything's fine as long as accounts work and statements arrive. What they don't realize is that outdated KYC information creates a domino effect of problems. Your accounts may get frozen, you may face investment restrictions for mutual funds, and worst of all, when FEMA sends penalty notices to your old address or email, you might miss deadlines and simple violations become compounded penalties. So the final banking checklist point: keep your KYC updated with current residential status, phone numbers, and email addresses. This 10-minute task prevents missing critical communications that could cost lakhs in penalties. The next section we're going to talk about is something that makes FEMA violations almost inevitable for NRIs if they're ignorant towards the laws. One of the most common FEMA violations occurs when NRIs overlook documentation requirements for NRO account repatriations. FEMA mandates filing Form 15CA for any amount transferred from your NRO account abroad, plus obtaining a chartered accountant certificate, which is Form 15CB, for amounts over 5 lakh rupees. The reason this violation is so widespread is because it affects virtually every NRI who repatriates funds. The technical process requires selecting the correct Form 15CA part, obtaining a CA certificate when needed, providing accurate PAN and beneficiary details, and completing all this before initiating the transfer. The penalties are severe, up to 1 lakh rupees per violation, plus blocked or delayed transactions. So your next checklist item is always file Form 15CA and get Form 15CB from a qualified CA before initiating any NRO account repatriation. Even with perfect documentation, you still need to carefully track your remittance limits. FEMA sets 2 critical caps that NRIs frequently exceed: the Liberalized Remittance Scheme, or the LRS limit of $250,000 per financial year for outward remittances, and the NRO repatriation cap of $1 million per financial year. What catches many NRIs off guard is not realizing these limits apply to the combined total of all transactions, whether for family support, property purchases, or investments abroad. So maintain a running total of your yearly remittances to stay within both the LRS limit of $250,000 and the NRO repatriation limit of $1 million. Next, FEMA restricts not just how much you send, but what you send it for and how you send it. FEMA prohibits remittances for several specific purposes, including lottery tickets or forex trading abroad, margin payments to overseas exchanges, remittances to FATF-identified high-risk countries. Lastly, 2 final technical requirements complete our money transfer checklist. First, any unused foreign exchange must be surrendered to an authorized dealer within 180 days of receipt or return to India. Second, your PAN is mandatory for all LRS transactions. Each remittance requires Form A2 with an accurate declaration of purpose. Misrepresenting this purpose is a serious violation. These money transfer rules may seem complex, but understanding them now can save you from costly penalties later. Now, before we move on, let me share something alarming that happened just 2 years ago. In 2023, the Economic Offences Wing uncovered a massive 1,000 crore rupees cryptocurrency-based Ponzi scheme that specifically targeted NRIs. The investigation revealed that the operators had collected deposits from NRIs in Canada, Dubai, Hungary, and Nepal, all who thought they were making legitimate crypto investments. And this isn't an isolated case. NRIs are frequent targets for various scams, from marriage and property fraud to portfolio management schemes that promise unrealistic returns. If you'd like us to create a detailed video covering these scams and how to protect yourself, comment below and subscribe to the channel so you don't miss it. Now, speaking of investments, let's move to the next part of our checklist: making sure your legitimate investments don't accidentally violate FEMA rules. One of the most frequent FEMA violations for NRIs happens right at the beginning of their investment journey, using the wrong account. If you moved abroad but still use your old resident demat account to buy Indian stocks, you're violating FEMA regulations. Many NRIs continue investing as they always have, unaware of the consequences. FEMA requires you to open a special PIS or Portfolio Investment Scheme account through an authorized bank for all stock market investments. This isn't optional, it's mandatory. Using the wrong account has serious consequences. You face penalties and your investments could permanently lose their repatriation status, meaning you can't take those funds out of India even if legally entitled to. Mutual funds work differently though. NRIs can invest in these, including SIPs, using either NRI or NRO accounts, with funds maintaining their repatriation status when redeemed. So your next checklist item is to close your resident demat account and use a designated PIS account for stock investments and complete KYC and FATCA formalities through your NRI or NRO account for mutual fund investments. Even with the right accounts, FEMA places specific limits on how much you can invest in Indian companies. As an NRI, you cannot own more than 5% of any listed Indian company's paid-up capital. And collectively, all NRIs together cannot hold more than 10% of a company's shares. Though this limit can be increased to 24% if the company passes a special resolution. These limits aren't something your broker actively monitors for you. It's your responsibility to track them. Crossing these thresholds puts you in direct violation of FEMA. So, monitor your ownership percentage in each company you invest in, especially if you're making substantial investments in smaller companies. Now, the last one is perhaps the most overlooked area of FEMA compliance, and that's the reporting requirements for certain types of investments. If you invest in unlisted companies or startups in India, every investment must be reported to the RBI within strict deadlines, typically 30 to 60 days. The same applies for foreign direct investments in Indian businesses. Many NRIs make these investments but completely forget about the reporting requirements. While these violations can often be resolved by paying a compounding fee, they still create unnecessary complications and expenses. Your final investment checklist item is set calendar reminders to file all required RBI reports after making investments in unlisted companies or startups. While FEMA allows NRIs to invest in mutual funds and stocks with certain restrictions, the rules become significantly stricter when it comes to property ownership in India. And this brings us to the next section, property-related compliance. In the last video, we discussed a case where Mr. Martin, an OCI cardholder, was penalized for 41 lakh rupees for buying agricultural property in Tamil Nadu. Unlike investments with percentage restrictions, property rules are binary. FEMA clearly defines what property you can and cannot purchase as an NRI or OCI holder. You can buy residential properties like apartments and houses and commercial properties like offices and shops with no limit on quantity. But you cannot buy agricultural land, farmhouses, or plantations, disappointing many NRIs dreaming of rural properties. However, there are two legal ways to acquire agricultural land as an NRI: through inheritance from anyone who owned it legally, or as a gift but only from resident Indian close relatives. All gifts need proper documentation, and you cannot receive agricultural land from friends or other NRIs. The penalties for violating these rules, as we saw with Mr. Martin, are severe, potentially 300% of the property value. So before purchasing any property, verify it's residential or commercial, not agricultural land. A second overlooked compliance area is the mandatory reporting requirement for property transactions. When you purchase property as an NRI, you must report it to the RBI within 90 days using Form IPI submitted to their Foreign Exchange Department. The same applies when selling property, where you need to report the transaction before repatriating funds. Many NRIs aren't aware of these requirements, or they miss these deadlines, resulting in technical violations and penalties. So to stay compliant, after any property transaction, file Form IPI with the RBI within 90 days. The final property compliance point concerns joint ownership. As an NRI, you can hold property jointly with other NRIs or with resident Indians. However, FEMA regulations specify that if you are holding property jointly with a resident Indian, you must be a close relative of that person. Additionally, the property ownership structure can affect your ability to repatriate funds for a future sale. So ensure any joint ownership arrangements comply with FEMA regulations, particularly regarding the relationship between the joint owners. Understanding these rules can now save you from costly penalties like the one Mr. Martin faced. Now let's look at our final category, gifts and loans, where many NRIs unknowingly violate FEMA rules. Let's start with residents in India gifting to NRIs. FEMA allows resident Indians to gift money to NRI relatives, but with specific rules. The gift must stay within the LRS limit of $250,000 per year, a crucial detail many miss as it counts towards the resident's annual LRS quota. Another important rule, these gifts must go to the NRI's NRO account, not their NRE account. This matters because NRO funds aren't freely repatriable. For example, if your father in India gifts you 10 lakh rupees, it must go into your NRO account, and he needs to ensure his total yearly remittances stay within the $250,000 limit. So ensure gifts from resident Indians to NRIs stay within the LRS limits and go only to NRO accounts. Now, when NRIs gift to residents in India, FEMA is more flexible. There's no specific ceiling on gift amounts. However, there's an important tax angle. If the gift exceeds 50,000 rupees yearly and the recipient isn't a close relative under Income Tax Act definitions, it becomes taxable income for them. Therefore, document all gifts with proper gift deeds and be aware of potential tax implications for recipients. Moving to loans. Resident Indians can extend interest-free loans to NRI relatives with strict conditions. The loan must stay within the $250,000 LRS annual limit, have a minimum 1-year maturity, and be credited to the NRI's NRO account. A critical restriction many miss. The loaned amount cannot be repatriated abroad by the NRI. So ensure resident to NRI loans are interest-free, have minimum 1-year terms, and stay within India for permitted activities only. For NRIs lending to residents in India, FEMA allows loans up to $250,000 on a non-repatriation basis. These loans need a minimum 7-year duration, with interest capped at 2% above RBI's bank rate. Exceeding this rate triggers penalties up to 3 times the loan amount. Funds must flow through normal banking channels, either inward remittance or NRI FCNR transfer. The principal and interest must remain in India during the loan term. So to stay compliant for NRI to resident loans, use proper banking channels, follow interest rate caps, and maintain the 7-year minimum duration. Lastly, there are 2 particularly common lending violations that lead to severe penalties. First, unauthorized lending to residents. This includes lending without proper FEMA compliance, exceeding interest rate limits, lending for prohibited purposes, or having a loan period that exceeds 3 years. The penalties here are severe, up to 3 times the loan amount if quantifiable, up to 2 lakh rupees if non-quantifiable, and a continuing violation of 5,000 rupees per day until rectified. Second, using the wrong currency or method of lending. Many NRIs make the mistake of lending in foreign currency to residents or not using proper banking channels for loan transactions. Double-check the currency, banking channels, and repatriation status of all loans to ensure they comply with FEMA regulations. We've now covered all 5 critical areas of FEMA compliance for NRIs: banking, money transfers, investments, property, and gifts and loans. There is a document link in the description where you can find all of this in one place. FEMA violations can result in penalties of up to 300% of the amount involved or 5,000 rupees per day until rectified. But with this checklist, you now have a framework to help you avoid these costly mistakes. Yet, I want to emphasize again that while this video gives you awareness, FEMA laws are complex and changing. For any specific situation, consult with an expert who specializes in NRI matters. If you found this checklist helpful, I'd love for you to subscribe to NRI Shaala. We're constantly creating content to help NRIs navigate their financial journey between India and abroad. See you in the next one.